Hi there, this is Brad Gilbert with the FX Market Insight for the 20th of July. All right, now let's just have a quick look at the what happened yesterday and where we are starting today's trading. So yesterday we had the key numbers in Asia were the Aussie employment numbers. Now the Aussie at the time was trading before the release around 74 the figure. We had strong employment change, and that saw the Aussie spike higher just above 74 sort of 30, and the numbers were really strong. And most of the other currency pairs were sort of sitting around recent highs and looked like they may sort of go on with it. But this is where the tricky part of, behind the scenes part of geopolitics comes into play. Now, what I'm talking about is this US-China trade war. Now, the Chinese don't have a hell of a lot to sort of bargain with. But what they do have is an extremely weakening currency. Now, at the very same time that Aussie data came out, it became apparent. Actually, I sort of picked it up out of the trade zone. One of our traders picked up dollar yuan was moving higher to the top side. Now, if the yuan or China is very important, in particular for Australia and New Zealand, right? It's the biggest importer of their products. So basically, if this goes up, Aussie and Kiwi come off. So we had strong Aussie numbers, yet the Aussie was stalling, and it was trying hard to work out whether the dollar yuan would go on with it, and go on with it. It did. It rallied about sort of 5 cents up towards 6.8. So that sort of led the other currency pairs, and this turned around the whole major picture. Okay, what do I say? The major picture, the major currency pairs, turned them all around, and it wasn't sort of apparent until probably the end of the Asian session. The Aussie started falling backwards. Let me just make that a bit wider. And Kiwi started to fall as well. Euro, not a lot of movement, but it did start to move down with the overall, stronger dollar. The dollar yen was just trading sideways for most of the time, and just started to rally a bit. But it was always going to come into question if this issue between China and the US for the trade tariffs did come into play. We saw that sort of have a knee-jerk reaction in the end to the whole thing. And also, just coming back into that, sterling was sort of drifting sideways for about 13 hours there, around 130.80, and it started to get the nervous Nellies. And then once that week UK retail sales figures came out, it got belted down to 129.60. And with that sort of stronger dollar CAD even rallied a bit as well. So what we had is a really sort of weird left field event. Now, the situation was, it was all around dollar China, right, or dollar yuan, right? Now, this is sort of shooting upwards. And then just to make things a little bit even trickier with this situation, okay, if I come back to the main news-wise, and you may have actually already seen this, the catalyst for most of these moves, or the reaction, or the weakening dollar sort of side of things, was Trump. I mean, this guy is a dead-set lunatic. Not only is he organising to get Putin over to the US for a holiday, basically he's starting to criticise the Fed now. Now, there's two parts to policy. One is monetary policy, which is managed by the central bank. The other is fiscal policy, which is managed by the governments. Now, it's very, very rare that you do get a government criticising the central bank. Now, this is exactly what Trump's doing. Like, no one is too far away for Trump to actually meddle with. Not only is he meddling with international trade policies and agreements, he's now sort of criticising the overall Fed and the job they're doing with interest rates and the strong dollar policy, which has been a policy for the US forever. So with that, I mean, this is I think it's a short-term knee-jerk reaction. So just coming back to the currencies, we have seen the currencies sort of just correct some of those moves yesterday. So a lot of these moves were, as I said, came from the weakening dollar yuan, and then you've got the weak UK retail sales figures doing its own job. But then you've got the reaction of these pairs, which is sort of bouncing back into the range following Trump's stupid comments about interest rates in the US and the value of the dollar. Right? I mean, he's dead set, got no idea. Dollar yen, I don't think it knows really what's going on. Okay, we've got the situation with the trade situation blowing up a bit. So you've seen a little bit of a breakdown through the cloud. Now it's sort of bounced back up to 112.50. you would have to think, as this continues, dollar yen would continue to sort of fall. What we've seen oil rally a couple of bucks, and that's put a bit of a strong dollar or weak CAD scenario into dollar CAD as well. Now, this brings us into today's trading. So, where are the major currencies going? Well, if anything, they're sort of just getting beaten up. We've got all these volatile moves all week just on peripheral events. I mean, sterling has been the one pair with CPI and retail sales being weak. That should definitely be going down. Dollar yen, I'm not so sure. If anything, it's broken down technically through the cloud. And dollar CAD, well, it's just, it's a little bit too hard for my liking, whether it's oil or what the main catalyst is for that. So you come into today's trading and you're trying to work out, put the pieces together and have a look where the next sort of major move is going to come from. So one of the things is, Trump is going to continue to do what he's doing. But the next major event that traders will be focusing on is, there's only one, okay, for this week, and it's the CAD CPI data. Now, this is obviously very important for the Bank of Canada with regards to their next interest rate moves. So watch that very closely. Dollar CAD at the moment, and you put the data back together with the actual, with the economic data coming out, the technical side of things. If you look at dollar CAD, it's pretty much in the middle of nowhere. So I think there's a pretty good chance for this CPI data to either, push it higher or push it lower. It's sort of just drifting and washing around with various Trump issues. Oil is, if anything, it's stabilized, but it is back towards 69.89. So anyway, it's going to be, basically what I'm trying to say is it's going to be a little bit tricky. So you come back to the currencies. We do have, a good positive sign that we are seeing some dollar strength. As soon as we see that, we do get trumped by the big man himself, and we are back to sort of square one. So it's been one of those patchy weeks where we have seen some good moves. Sterling, as I said, is a standout for me with the economic data is really weak. Inflation, even though it was weak, is still above 2%. So they are still going to be under pressure to raise rates again in the UK going forward. Now, the US dollar, okay, I mean, it's sort of whipping about like the majors. And if anything, it's going sideways, but it's sort of trading sideways in about 100-point range. So just be aware, there's no sort of core direction from Trump. From the Fed, they are still pushing ahead with further rate hikes. So I don't think that's not going to change anything. And Trump is not going to change what they're doing. But one thing that we need to keep a close eye on is dollar yuan or dollar China, whichever you like to call it. It is now, I mean, obviously it is a sore bone with Trump. He has actually highlighted that there's a couple of things that he doesn't like besides everyone else besides the media, I should say, is the high US dollar, the way the Fed are raising interest rates, and also the weakening dollar yuan. Now, this was always going to be an issue because China don't have any other instruments besides a weakening currency. And it plays what he's actually doing in picking on China, saying he's going to raise the tariffs, but by the fact that the currency's weakening so much, those tariffs won't have any big deal because the currency's weaker and the products are cheaper. So he's an idiot. So anyway, we're going to deal with that, and we have been for some time. So it's just a matter of us sort of trying to work out where that next best trade is. Now, as I said, the Chinese data is, the Canadian CPI data is going to be the key to it. Just keep an eye on, during the North American session, this is when he's usually coming out with a lot of this crap, is any sort of comments that may come into play. It's as I said, it's very rare that you see a central bank or a government criticising the central bank, especially when economic conditions are improving, right? The guys definitely got no idea. So just come back and have a look at your major currency pairs. You're looking for the, some major levels, good support and resistance. We're just adjusting the high there on the Aussie. We do have a really good support trend line, which sort of held with the Aussie yesterday. It's back trading mid-range. So it's lost all that momentum it had yesterday. If anything, keep an eye on dollar yuan. Kiwi had a nice tumble back in the middle of the range. Dollar yen looks like just a whole big false break set up there. It's back under the cloud. It should probably trade sideways. We did have some CPI numbers out of Tokyo, the nationwide numbers, pretty much as expected. So I don't see much from that. Euro, well, we've got no major data. It's back in the range there as well. Sterling, well, it's come a long way from 132.60 this week with a whole range of weak data. I'd expect to see further selling interest around that 130.5 at least. It's going to be under pressure. And as I said, the key data today is the Canadian CPI numbers. So just keep an eye on that as we go forward. With those numbers, you do have the month-to-month, year-on-year, but just keep an eye on the Bank of Canada core numbers. They will be the ones that the market looks at closely, and you are looking for the retail sales figures there to sort of come into line as well. So don't forget, there's two core numbers. The CPI number is the main number. If the CPI and retail sales figures do come out either strong or both weak, then we are going to get a pretty good momentum opportunity on dollar CAD. All right. Anyway, guys, that's pretty much it from me. There was a, if you happened to be in front of the screens yesterday and you saw the dollar yuan sort of moving, you could have got on the back of some of those moves. Otherwise, you're probably limited to what sterling was doing. It is throwing up some good moves around those economic data releases. Brexit has been pushed to the sidelines at the moment, but I expect it to come into play as well. If anything, you're watching this dollar China very closely because it is a real raw nerve. And now that it's moving the major currency pairs, more traders will be watching it. So keep an eye on it. We do have a couple of support levels lower, but it's in the middle of nowhere and could either go up or down. So just be aware of what's going on there. And you can be sure as hell the China are not going to do anything to stop it falling, right? It's actually a really good situation for them. All right, that's it from me, guys. Bit of a mouthful this morning, but that's what you get when you get the Trumpinator sort of jumping on board. Just keep an eye on those, as I said, the major currencies. During that Asian session, keep an eye on dollar China. And as you go through the North American session, the dollar CAD or the CAD crosses are going to be the key currencies to keep an eye on. All right, guys, if I don't see you in the trade zone, have a good weekend and all the best for your trading. Cheerio.